Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 1st through July 5th. We'll strive to help you make money trading in July of 2024. So again, thank you for joining us for part one of our weekly trading game plan for July 1st through July 5th. And let's talk about making money trading in July of 2024. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for July 1st through July 5th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our market strategies, trade ideas, etc. You can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes, Google documents, in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks. And you can also find a direct link to that Google Drive folder in the description box below. So first, let's take a look at how the markets ended up on Friday, and the main page on FinBiz. So we'll see all the markets kind of started up, dipped down, pretty much ended flat. We see a pretty significant market on close decline in the NASDAQ, ended up down 0.71. Again, Dow pretty flat, ended up at 0.12. And the S&P ended up negative 0.41. Again, we see a significant market on close decline there. See some rotation profit taking out of the Mag 7. Again, we'll talk about that. Friday was end of month, end of quarter, end of first half of 2024. So as we discussed last week, we expect some rebalancing going into the next quarter, next half of the year. So we'll talk again about that idea of the rotation due to the change in quarters, change in months. See, the advancing and declining is pretty balanced, 50% advancing, 45% declining. We did get 71% new highs, 28% new lows. Again, we've got a pretty balance above the 50-day moving average, 50% above, about 50% below. But we've got a 60-40 split above the 200-day. So it shows, again, pretty tug of war, end of quarter, end of month, pretty balance between the bullish and bearish signals. Welcome to Crow, Gerald Fitz. Thank you for joining us today in the chat. Hope you all had a good week, are doing well. So some of the news, we got the politics, and we won't talk too much about politics right now. EV prices, stock prices matter. Economic cracks are getting exposed in the 2024 market. S&P closes lower Friday. AI trade drives a 14.5 gain in the first half. So we've been talking about the AI FOMO continues, Magnificent 7 momentum. Saw oils dip down a little bit, kind of tested that 80 support level, bounced back up to 81 or so. So it's pretty stable above 80 right now. Natural gas did dip down, and we'll see if it's making a higher low or if it's going to retreat further. We did see gold retest that 2350 resistance level, bounce back down. We'll see that in the futures as well. Right now we see the Dow, S&P, and NASDAQ futures all pointing down slightly. Russell pointing up slightly. Yen's been very weak. We'll see that in the futures as well. Bitcoin declined around 60,000, and we did see a little bit of a surge in the Treasury yields on Friday. So back up towards that 4.5 level in the 30. I thought it was interesting. We finally have a de-inversion of the 5 and 10, so some correcting in the yield curve that actually should be a positive for the economy in general, because they talked about an inverted yield curve being one of the signals for a recession. Welcome LinkedIn, Gerald Fitz, the Crow again. Hope you all are doing well. So let's look at a breakdown of the major indices and then also the technology components within those indices. Just a quick reminder, you can find quick links to these screeners in our Google Documents and also in the screener sheets in our ETFs and Watchlist Google Sheets. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. So if we look at all the major indices, again, we see the Dow's been pretty flat. It's got a pivot point as a resistance, testing that resistance level, bouncing down to that uptrending support. So again, just kind of oscillating between those two, but generally pretty flat. IWM is oscillating around this lower trend line. So again, providing resistance. So that's bouncing back down. Qs testing that upper trend line, getting the resistance, dips back down. We'll probably see it retest that upper trend line again, making new all-time highs. SPY not quite as strong. Again, it's got some support below. So, and then it's still a steady uptrend. Moving averages moving up. So again, Qs providing the strength. Again, Magnificent 7 momentum as we talked about last week. We'll see if that continues. Again, we'll talk about a potential sector rotation. Look at the technology components. Again, ARK-K not really going anywhere. Down below this pivot point, below moving average, providing resistance. Downtrending, again, ARK-K not really going anywhere. Again, Magnificent 7 momentum, so the FANG U's making new all-time highs, testing that upper resistance level, getting support from that lower trend line. So again, strong uptrend, a lot of momentum still in the Magnificent 7 in the FANGs. See that in the TQQQ as we talked about the NASDAQ. Semiconductors a little bit weaker, so we saw that bounce off that upper trend line, dip back down below the lower trend line, trying to recapture that trend. So again, upward trend, mostly NVIDIA based, some Micron, etc. Although Micron had a correction after their earnings. Again, biotech in a narrowing wedge, just kind of oscillating in that narrowing wedge, bouncing off support, getting rejected off resistance, not really trending up or down, just pretty lateral. So expect to continue just bouncing in biotech. Again, broader technology, not quite as strong, but still uptrending. Again, mostly driven by Magnificent 7, the FANG stock. So I hope that all helps. Welcome, Fairchild. Glad to see you. Thank you for joining us. The Ricky Khan, good to see you too. Walter Lyons, thank you all for joining us in the chat today. So let's look at the sectors, the groups, etc. See if we can see some kind of a sector, potential for sector rotation in the next quarter, next half. So we go to the groups tab in FinBiz. We can see Friday with the bounce up in yield, surprising real estate, stronger financials, energy, again, rotation into energy we'll see. Again, some profit taking in technology, some in utilities, communication services. For the week, again, energy, real estate, financial, stronger. So again, some sector rotation out of some of the technology, utilities, defensives. For the month, technology strong, real estate again continues to make a rebound in June. Some healthcare, again, utilities and basic materials generally weak. Probably a decline in gold and silver over the month. But for the quarter, technology, communication services, again, mostly the Mag 7. FANG stocks the strongest for this quarter. So again, we'll see if we get a continued sector rotation from the leaders to laggards, laggards to leaders. So again, we saw that move up and start to go in energy, real estate, etc. We'll see if we get a rebound in basic materials. Again, for the half, it was all Mag 7, technology, etc. The weakest, real estate, basic materials. So again, with the end of quarter, end of first half, we'll see if we get a sector rotation from laggards to leaders, leaders to laggards, which would mean more profit taking in the technology in the Mag 7 area and rotations into areas like energy, real estate, etc. So I hope that helps. Welcome, Danelle. Thank you for joining us. Hope you're doing well. So we look at the industries. Again, got some basic materials recovering. Coal, aluminum, steel. Some of the REITs, so real estate recovering on Friday. Solar very negative, bond yield. So we had a bounce. We'll see a bounce in uranium, but then a decline. And this is an area where I'm looking at the individual stocks, and just while I'm here, you can click on any group, industry, sector, and see a breakdown of the individual stocks in that sector. So uranium's one I'm watching. Particularly, we like DNN, LEU. I'm particularly watching UROY. We've traded that profitably in the past, looking for a little bit more of a dip in UROI for a potential swing trade in uranium with UROI. So just keeping an eye on the uranium stocks, looking for swing trade opportunities there. And again, just a tip, you can always click on an industry or sector to see the composite stocks, look for opportunities in those. So for the week, we see some energy, oil, again, oil back up over 80, some real estate, basic materials somewhat negative, chemicals, aluminum, some REITs, mortgage REITs. So again, we see uranium was negative for the week, silver negative, solar very negative, some retailers negative for the month, real estate recovering. Again, more real estate recovering, some oil. Again, basic materials weak. So again, we'll see if we continue to get a rebound in some of the basic materials. Again, uranium very negative for the month. Silver very negative. Solar very negative. For the quarter, semiconductors, again, NVIDIA. So technology, semiconductors for the quarter. Gold positive. Silver somewhat positive. So again, for the quarter, we're starting to see that rotation, out of basic materials in the quarter, slight rebound recently. Steel very negative, retailers, pharmaceuticals. For the half, again, semiconductors very strong, basic materials pretty strong. Real estate split, so mostly negative for the half. Steel, solar, some pharmaceuticals. So again, look for opportunities, with the rebalancing end of quarter, end of half. See if we get a rotation from laggards to leaders, leaders to laggards. We'll see if we get that. So keep an eye out for that rotation. Again, that would mean some more profit taking out of technology into some of the other energy, basic materials, etc. sectors. Okay, I'll bring up the economic calendar. We'll go over the important economic news from last week, talk about the upcoming economic news for next week. I'll go through some of my comments on highlights, etc. And then, again, we'll look at upcoming economic data for next week. Let me grab a quick drink and we'll go through all the economic data. Okay, just a quick reminder, as the important economic data comes out or important news releases, I try to capture that information and post it in the Surf the Markets channel in our Discord as quickly as possible. Our Discord is free to join. You can find a free invite in the description box below. And again, you can see I'll try to capture that screenshot of the important economic data out of investing.com, also the raw data, some of the inventories, oil and natural gas inventories I get from the calendar screen on FinViz, post those as quickly as possible. So again, a great way to keep up to breast on real-time news and the economic data by joining our Discord and watching the Surf the Markets channel in our Discord. So okay, we'd love to see you in our Discord, also 24/7 discussions on all topics related to trading, making money trading, etc. So again, love to see you join and actively participate in our Discord. So not a whole lot Monday through Wednesday. Thursday, got jobless data and durable goods order and GDP data. So if we start with GDP data, GDP came in for the quarter at 1.4, expected at 1.3. Price index as expected. Sales a little better than expected. So again, no fear of a recession. GDP still growing, so no concern there. If we look at jobless data, jobless claims initial came in below expectations. So new people losing jobs below expectations, continuing a little bit higher than expected. So it's taking people a little bit longer to find jobs. Durable good orders positive, so that's also good for the GDP, good for the economy. PCE prices a little bit higher than expected, but not dramatically. Consumer spending below expectations. So again, that's inflationary if the consumer's continuing to spend too much. So it's actually a positive sign again for inflation. So our job market continues to look resilient. GDP steady, no fear of a recession. And inflation, as we'll see, also is smoldering, but slowly coming down. So again, nothing indicating that the Fed would have to cut anytime real soon. So then Friday we got PCE data. Again, this is the Fed's preferred measure of inflation. And we can see it's pretty much in line, core, month on month, year on year, both as expected. Price index as expected. Personal income a little better than expected, and spending a little less, so that's all positive. And we also got Michigan consumer sentiment. Their inflation expectations came down a little bit. This is a revised number, second read on Michigan sentiment. So again, still 3%, so still higher than the Fed would like, but down a little bit from the previous read. So that's again positive, and their sentiment expectations did improve slightly. So again, consumer feeling a little bit better, thinking inflation will eventually come down, but still too high from the Fed standpoint. So we'll look at some of the other economic data from last week and then also for next week. Just a quick reminder, Thursday is the 4th of July, Independence Day, and so the markets are closed on this Thursday for Independence Day. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. Okay, if we look at the rest of the economic data from last week, again, we still got Fed officials talking, so they're talking about, inflation's still too high. They can wait for data, see when they're going to cut. So one of them came out and said they're still open to a hike if inflation continues to stay high. So again, no imminent cuts coming. Bond auction's a little bit weak. Again, more Fed officials, housing weak. Again, high mortgage rates, high interest rates. Consumer confidence a little bit better. Crude oil stocks positive, expected to be negative. So again, we see oil prices holding up above 80. Building permits down, but better than expected. Permits a little better than expected. Mortgage rates at 6.93, so below 7, so a little bit better. New home sales below expectations. Crude oil inventories positive. So again, slight decline in oil prices down towards 80, but still holding above 80. Talked about jobless claims and PCE data, durable goods. Natural gas storage up, but so a little less than expected. Again, we've seen natural gas prices drop a bit. Talked about core PCE, personal spending, Michigan sentiment. Oil rigs declined slightly. Total rigs declined slightly. So again, rig count declining, trying to hold the price up above 80 or so. See what we have next week. So more Fed officials talking. Got some manufacturing data on Monday. Jolts on Tuesday. So we'll see if the job market's continuing to come more in balance. Again, the Fed's paying more attention to this more recently, so that will be interesting, potential source of some volatility. Mortgage rates, ADP non-farm payroll, so get payroll data, initial claims, continuing claims on Thursday, more ISM data, more Fed officials. So again, markets are closed on Thursday. And then we get non-farm payrolls on Friday. So again, Friday, people will be focused on the non-farm payrolls, see if that shows higher unemployment than expected, which again, if it's higher, that might indicate the Fed would cut sooner. So even though that's a negative for the economy, the market may like it if unemployment ticks up a little bit. We can see it's been steady at 4%. For quite some time. So again, Friday, some Thursday, Friday, Wednesday, Thursday, Friday, some potential for volatility. So I hope that helps. We quickly jump to the earnings calendar for next week. Not a whole lot. Fisker EV, again, this should be wrapping up, and then we'll be rolling into the next earnings season soon. So again, not a whole lot of earnings. Uranium, there's UROI, so maybe an opportunity there. Gold, so again, not a whole lot of market moving earnings coming up. So we should be wrapping up. But again, worthwhile to see if there's any in particular that might affect your trading. Again, the next FOMC meeting is until the end of July 30, 31. So I don't personally expect any change at that meeting. Although they're trying to talk that's active meeting, I don't really expect they're going to do anything there. We don't get a new dot plot till September. So again, don't expect any changes there. So let me grab a quick drink and we'll jump over to the market screen in Webull. Take a look at the data we have available there. Just a quick reminder, if you're not already using Webull, we have a number of promotions available. If you open and fund an account now with Webull, if you open an account and fund it with 25K or more, you can get 75 free fractional shares of stock worth $300 to $3,000. If you fund with less than 25K, you get 20 free fractional shares. They're also offering a transfer bonus of 1.25% cash for transferring investments and a 3.5% match on contributions or transfers to your IRA. So again, if you're not already using Webull, we use it for our market analysis, our due diligence, the majority of our trading. And if you'd use our affiliate link in the description box below, you can get all of these current promotions and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen of the online browser version of Webull. So we like to look at the histogram of advancers and decliners. So it's kind of a balance of the tug of war in the market. So we see on Friday, we had more advancers than decliners. The number of advancement was very small. So again, mostly very small movements, tug of war in the market, end of quarter, end of first half 2024. Thought the net inflow was interesting this week. Last week, we'd seen a pretty steady inflow into the NASDAQ. And now for this Friday, we see a pretty steady increasing outflow out of the NASDAQ with a significant drop on the close. So again, probably a lot of profit taking flowing out of the NASDAQ. See a steady inflow in the NYSE. We don't see the huge bump at the end of the day, but a steady positive inflow in the NYSE. So again, some potential profit-taking rotation out of the NASDAQ, out of the technology. So we'll see if that continues again into the next quarter, next week. Again, you can also see the near-term earnings calendar in the calendar section. Under earnings, you can also see dividend splits, etc. So keep an eye on anything that's earnings coming up in the very near term. Look at the best performing industries for the week. So we see some education, very positive, a lot of education positive. Auto parts a little bit positive. Oil, again, energy, oil and gas. So we're seeing again that rotation. Some financials. Small healthcare, small logistics, transports, some retail, some REITs. Again, talked about the rotation, recovery in real estate, coal. So again, energy, some IT services, some telecom. Got the ETFs. Do me a favor, the crow, we're going to talk about ETFs in a minute. Please remind me of that one again. I'm going to talk about a couple other Ethereum ETFs. So we look at the most popular ETFs. So short on the NASDAQ, short on the S&P, short on the Dow. So again, right now, ETFs pointing down on the NASDAQ and S&P, down on Bitcoin, up on the VIX. So the VIX been very low. We'll see it actually went down below 12 at some point yesterday. So it's again been very low. We'll see that in the futures. Small caps up, Russell up, down on Europe. Some industrials positive, pretty mixed. Healthcare mostly negative, financial mostly positive, communication services mostly positive, utilities mostly negative, energy positive, real estate positive, defensives mostly negative, cyclical, so consumer sectors mostly negative, um, slightly negative on basic materials, but positive on copper, steel, nickel. Commodities, positive on palladium, grains. Again, we'll look at grains, palladium, grains. Looks like some high yield in bonds. So next we'll go and look at the futures in FinBiz. And just a quick reminder, you can now trade futures in Webull also. So you can also find more details about trading futures in Webull via the link and the details in our Discord. We look at the futures in FinBiz. We see the Dow pretty flat, oscillating, generally pretty flat. S&P trending up, but just oscillating along that top. NASDAQ stronger uptrend, more momentum in the Magnificent Seven. Russell again pretty flat, just oscillating, got a little bit of a bump. Nikkei uptrending, probably on the weakness of the yen. Europe downtrending. DAX pretty flat. Again, we haven't seen a whole lot of volatility. Again, the VIX dipped down below 12. VIX futures showing flat around 14. Again, not a lot of fear in the market, not a lot of volatility. We'll see if that changes with the new quarter, new half. Again, oil support at 80. Tested a little bit above 81, but generally pretty flat. Good support at 80. Again, natural gas been, downtrending. We'll see if it holds the support around 250. If not, it could downtrend significantly farther. It had been making higher lows, so it looks like it now broke down below that trend. So again, support at 250, but again, if it breaks that, natural gas could go into a downtrend for some period. Again, gold got resistance at 250, tested that resistance, bounced back down, and we see it's making slightly lower lows, got good support at 2300. So we'll have to see which breaks first, that resistance at 2350 or that support at 2300. Similarly, silver broke down below 2350. It's got support near 2850 or so. Retested that resistance at 30. Looks like it failed. Another interesting thing with silver is you'll notice when we get these major moves, similarly with gold, if we get a move up or down, we seem to get a pretty almost immediate correction the next day or within a couple days. So the last downtrend, it went doji for a day and then corrected the other way. So again, plenty of good day trade, short-term scalping type opportunities. And we've talked about the leveraged ETFs in silver and gold that you can short-term trade these quick moves up or down, make some good money using those leveraged ETFs in silver and gold. More so again for your short-term day traders, scalpers. I'm not quite as nimble, but I think there's some opportunities there. Okay, we'll have to see if silver is going to make a lower low, continue to downtrend, or if it's going to break back up above 30 and hold that support. Copper looks like it's trailing off a bit. Palladium, again, some pretty volatile when it takes off and then corrects pretty quickly. So I might get a quick correction back down in palladium. I want to come back to talk about this decline in corn and talk about potential opportunities with corn. We'll look at this in more detail, look at the corn ETF. But again, we'll talk about potential opportunities both with futures trading and ETF trading corn. So I'll come back to that major decline in corn in a minute. Oats look like it bottomed and bounced. Wheat was downtrending. Looks like it found a support level and bounced. Lumber bounced back up. Coffee been kind of flat. Sugar swinging back up. And then again, we saw bond yields, came back up now in the 4.4, 4.5 area. So bond prices back down. Dollar DXY, up above 105. I think it tested 106 or got close to 106 at times. And I think a lot of that's a weakness in the yen. Other foreign currencies pretty stable. Looks like the Swiss franc peaked and trailing down, gap filling, etc. So again, yen made a 40-year low. So we'll see again if the BOJ intervenes, and if so, how, for a recovery in the yen. Okay, next we'll jump over and we'll talk about our ETFs. We'll look at our ETF Google Sheet. Again, as we identify potential opportunities in various commodity, topic, index, etc., then we can jump over to our ETF Google Sheet, find some ETFs that we can use to trade that trade idea, be it a long or a short. And again, you can get access to our ETFs Google Sheet as well as our other Google Sheets like dividend payers, covered calls, puts, etc., all by joining our Patreon at the All Access or VIP level. So again, let me grab a drink and we'll open up our ETF Google Sheet, look at some additions. Again, we'll revisit corn. So let me grab a quick drink and we'll talk about, again, some additions to our ETF Google Sheet, and then again look at opportunities in corn. Okay, firstly, I want to talk about a couple additions to the research sheet in our ETFs Google Sheet. And I noticed in FinViz, I think it was this SETH, which is a short on Ether, short on Ethereum ETF. I believe that showed up as a double bottom or multiple bottom on the main page in FinViz. So I thought that would be an interesting theme, is we hear the potential for approval of Ethereum spot ETFs. So that might cause some potential opportunities, trading opportunities in Ethereum. So I found this, we'll look at the short on Ethereum, and then also I found the corresponding long in Ethereum, which is EETH. So we'll take a look at the risk-reward profiles of those two, and also I can quickly add the one that the Crow mentioned as well. If we go to the bottom of our research sheet, you'll see those two Ethereum ETFs. So again, the long is EETH, the corresponding short is SETH. So Crow, let me see if I can get the one that you mentioned. Oh, let's look at the long on EETH. So again, you can get to the profile of a ETF by going to the FinViz URL column, clicking on the link there. So we can see here's, it's been up. It's got some support at 64 or so. You see these Ethereum ETFs by ProShares haven't been around real long. Been, uptrending pretty good. See the risk reward profile. Almost a 3 to 1 or so. It's also paying a dividend. So this one's paying a 7% dividend. So again, if you want to hold an Ethereum ETF and get a dividend, it is optionable and shortable. If we look at what it's comprised of, you can see it's futures. So this is not a spot ETF. This is a futures ETF on Ethereum long. So it's corresponding to the performance of Ether. So it doesn't look like this is leveraged. It looks like it's just based on the Ether futures contracts. So again, this is a long on Ether. We look at the short, SETH. So it's going to be the inverse of EETH. So again, yeah, it showed up as this double bottom. So I thought that was interesting. Again, with the potential approval of Ether spot ETFs, we might see a similar behavior to what we saw with the Bitcoin approval of the Bitcoin spot ETFs. This one pays a smaller dividend. It is optionable. Better than 2 to 1, 52-week range. So again, if you want to trade the potential reaction to the approval of a spot Ether ETF, you could potentially use these two ETFs, EETH, SETH, and again, I'll get to the one Crow mentioned in a moment. So again, you can see the longs offered a 2.5% return over the 52 weeks. So it's been, nice risk reward profile over the past year. Again, it could trend up further with that approval of the spot ETF. So we'll see that, see if that continues. Again, then SETH would continue to decline, probably break down. So again, a couple ETFs you can trade, Ether futures. So what was the one? Remind me, Crow, if I get it wrong. What was it? ETHU? Okay, great. So there's a 2x, a leveraged Ether ETF. So we'll add that one. So thank you for finding and sharing that one with us, Crow. So if you want, as Crow says, more juice, you want the leverage. You can see this is very new, so we don't have a whole lot of history on it. Looks like it pays a very small dividend. It is optionable. Again, very new, so we don't have a lot of history, don't have a lot of range. But again, if you want the 2x leverage on Ethereum, you can use ETHU. And again, I'll add that to our research sheet as well so we can track that one. Also, again, since we don't have much history, just use the 52-week as all of the risk reward parameters. So we see 1.49. So again, it's mostly, we just don't have the history to see the 2x leverage in the risk reward profile. But again, now you can track the leverage long. You said there's BETH is the short. Okay, so that's a Bitcoin and Ether combined short. So if you're interested in both Bitcoin and Ether together, market weight strategy, you could check out that BETH. So again, ETHU, 2x leverage, futures contract. So again, these are all based on futures. So again, when the spot Ethereum ETFs come out, then we'll also take a look at those. So again, you can monitor the risk reward profile, take opportunities long or short Ethereum using these various ETFs and also the BETH that the Crow pointed out. So I hope that all helps. So next I wanted to revisit that corn opportunity that we saw. So we saw corn futures had dropped significantly recently. So I wanted to see if there was an opportunity. We do have a corn ETF that we'll take a look at. But first I wanted to point out you can track the futures in Thinkorswim using the symbols /ZC. So I put a price alert at the current 52-week low on the corn futures, which is about 394.50. So again, if that triggers, we'll get alerted in our Discord. Then we could take a look at the corn ETF to see if there's an opportunity with an attractive risk reward to play corn. So I put a link to the monthly chart of the corn futures in our notes. I wanted to point out that I talked about 394 was the 52-week low, so it's not quite there, but it's downtrending there. You can see there's a much longer term low around 300, so corn could continue to decline down to that 300 level. So I would keep an eye on this longer term support level, longer term low around 300. Thought it was also interesting the commitment of traders. If you look at the chart with the long-term traders versus the commercial hedgers, the last time we saw an upsurge in the large traders, it corresponded to an upsurge in corn. We see this crossover back down was pretty much near the low. So once large traders hit a minimum, that was pretty much the lows. So I thought that was interesting. So yeah, there's the previous low was a low minimum in the large traders, kind of a pop-up in the commercial hedgers. So I think you can get some benefit also by looking at the commitment of traders information in the futures chart in FinViz as well on these commodities. So again, then we saw this recent crossover, large traders trending down. So kind of wait for that to bottom, and that might mark the bottom in corn as well. So if I jump over to the corn ETF, so in our main sheet, we have the corn ETF, and we can look at the risk reward profile for that. So again, you can see right now it's near the 52-week low, but not quite at that 52-week low. But the risk reward profile at that 52-week low is only 1.4. So again, if you're a short-term trader, if you want to scalp a rebound in corn using the corn ETF, that might be a way to go. We don't trade futures directly. We use the ETFs right now. So you might get more pop out of trading the futures. But again, if you want to trade the ETF, it looks like the risk reward currently at the 52-week low is only 1.4. It'd have to decline to a bottom at around 11.5 to really get a significant risk reward profile. So I hope that all helps. Okay, if anybody else in the Discord has particular ETFs you want to look at, we've talked about the various long and shorts for the technology components, LabU, LabD, etc. We talked about, mentioned silver and gold. We have a number of silver and gold long and short, so GDXU long, GDXD short. Have several other options. You can long or short. Similarly with silver, the long is AGQ and the short is CSL. We also have a short of those. That is the short. Several other longs. So if anybody else has a ETF you want to look at, please let me know. I'll leave this up for a minute, but I do want to get to our theme for this week. Let me grab a drink and we'll look at how the markets, how we can make money trading in July of 2024. We'll see how the markets typically perform in July. So again, our theme for this week is to make money trading in July of 2024. So we'll see how the markets typically perform in July relative to some of the other months. Just a quick reminder, we have previous discussions about how to make money trading in July, how the markets typically perform in July, the best performing sectors and industries in July. And you can access all those videos via the links in the notes or also on our BeachBum trading channel. So if we look at the new graph they have in investing.com on the historical market performance, so we've got a breakdown of the past 5 years, 10 years, 20 years, and since 1950. So we see it's been positive all those time periods. So more so the past 5 years, past 10 years. So the past 10 years, July's been very positive, more so than June. So as we've been talking, get that sell in May trend or adage, and then we get a nice rebound June, July. And historically, we get a drop off in August, goes negative in September. So again, July is a very positive month to be trading. Good for the longs. We'd expect the momentum to continue. So again, you'll hear in our short video on the best performing industries and sectors, energy is one. So again, that goes along with our potential sector rotation for the next quarter, next half. Again, you got summer, people traveling more, etc. And with the tightening consumer, we may see more, driving, more shorter term vacations, not as many flights. And we had seen that, although I did hear that the flights are expected over the 4th of July holiday to hit a new record high. So again, still plenty of travel, which would be, again, energy and some other, tourism, etc. Potential industries to look at July. But then again, we get a drop off into August. So possibly want to protect your profits, take profits before we get into this drop off into August, September. So again, I hope that all helps. Again, you can hear more about that as well via the links to our videos and our notes. We also talked about how to make money trading in the summer, how to trade the summer stock market doldrums. We have seen, a drop off in volume. And so, and again, not a whole lot of volatility right now. So we'll see, probably continue to see the same low volume, some little bumps in volatility potentially. And you can again hear how the markets perform in the summer via the links to our videos. And again, we're talking about sector rotations and a quarter, laggards to leaders, leaders to laggards, going into the next quarter, next half. So if there's anybody in the chat who has another ETF or topic or anything that you want to discuss today, last couple minutes, if I missed your question previously, I apologize, and please throw that back up in the chat. We'll try to cover that in the next last couple minutes. And we'd also love your feedback on what we can do to improve our weekly trading game plans, any of our other videos, our tools, resources, Google Sheets, etc., our community, again, our Discord. What can we do to help to add more value for all of our fellow BeachBum traders? We'd greatly appreciate it if you'd smash the like button, share our content with your fellow traders and friends. Again, we need your help to continue to build our BeachBum trading community. Join us in the Discord. Again, if you have a question after the fact, you can put it in the comments or suggestion, put it in the comments to the video. Contact us in our Discord. And also we have links to all of our social media sites on our homepage, beachbumtrading.com. So you can also contact us with any questions, recommendations for improvement, etc. via the links to any of our social media sites on our homepage. Also find the link to our free Discord. So again, thank you all for joining us in the chat today. We hope you all come back for part 2 of our weekly trading game plan tomorrow, Sundays, 10 a.m. Eastern Time on Sundays for part 2. And we will talk about all of these, how we can use all this market analysis, trade ideas, strategies, etc., to select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. Again, we'll also cover how we can use dividend-paying stocks and option strategies to also generate income and make money trading in July of 2024 together. So again, thank you to everyone who's participating in the chat and watching after the fact, and we hope to see you all again tomorrow. Thank you again, and have a great day.